Awesome. So I appreciate everybody coming to Transformational Tuesday. I'm hoping that we'll have a little bit of interaction today, but don't like to force people to interact. So today I picked a topic that was kind of near and dear to my heart, and it's the fact that we're halfway through the year. Can you imagine that? I don't know where the year goes. So anyways, I'm going to start by sticking my contact information in the chat. If Keith, can you give me a thumbs up? You can see my screen. Awesome. Thank you, sir. Just want to make sure. So it's hard for me to see everything the whole time. So if you guys have a question, I try to keep the chat open. I'm also going to ask a couple of questions and see if people don't mind putting a little answer into the chat. As always, I want these calls to be as interactive as possible. I'm here hopefully helping you to be able to learn and to take massive action. So I was kind of surprised, the older I get, it seems the faster time goes. And I'm sure a lot of us feel that way. It's like, I'm like, wow, I was looking at my calendar trying to think of topics, and I'm like, this is pretty much halfway through the year. And I was sitting there analyzing myself, and I thought, well, I'm going to do a talk. So tonight's lesson is as much for me as it is for you all. So I just want to make sure that I mentioned that. So tonight, we're going to talk about taking massive action. Doing the same things won't give you different results. So as always, this is an educational series. I teach you what I believe to be true, to be correct. But before you make any financial decisions, real estate investing decisions, please do your own due diligence. All passive investments, all real estate investments have risk. So a little bit about, I've switched up some of the topics here, but I always talk about that you can be actively passive. And I know that sounds kind of what do you mean be actively passive, Trevor? I just want to be a passive investor. And you definitely do. But to become a passive investor, you need to gain the confidence, you need to gain the knowledge and the understanding, and make sure that you know what you're investing in, who you're investing with, what are the risks, what are the rewards. So part of my goals for these Tuesday calls is to help people understand that, help them to be able to learn about what you can do to make sure that you invest with confidence. And then if you are interested in becoming more active, so if you'd like to start learning more about becoming a deal sponsor or different things, we do hold 3-day in-person training events in different cities. So they just had a great event in Dallas. Next one's coming up in Austin. The following month will be in July. So if you're interested in learning about how do I become an active investor, just feel free to book a call with me. Happy to give you some information. So a little bit about myself, because I thought I never actually talked too much. So I started investing in 2018 as a passive investor. It's also called a limited partner. So in those 6.5 years, I've invested as a passive investor in 20 syndications, and I am a general partner sponsor, which is on the active side on 13 syndications. So I've been pretty busy in the last 6.5 years. I've learned lots of lessons. I always love helping people learn. If I make a mistake, and believe me, I've made a few mistakes, I like to be able to help others and coach them through not making the same mistakes that I made. So again, this is one of my main mentors is Phil and Shanoa Grove. I joined a real estate group with them, and then they also are involved in the Massive Masters, which is Massive Capital. The group I'm with provides the active education. So Phil does a call at 7 on Tuesdays. Actually, I believe he's doing a live presentation in Austin, and it just gets presented through the internet. So if you're interested, you can scan this or just let me know, and I can put a link into the chat to be able to have you join it. So again, a little bit about Massive Capital. We're a vertically integrated real estate company. We're a developer of Class A retail and town centers. We're an owner operator of value add multifamily. We do LP equity retail and family office. And so that's basically our investors into our deals through our Partners Realty One, where you have a triple net. So a triple net is a very common term for retail or office developments, and they have a brokerage. We also do land development. So our next tour next month, if you're in the Texas area, is going to be 110,000 square feet industrial development in New Braunfels. Next week, I'll have a little more information on that, or follow me on LinkedIn or Facebook, and I'll post it there. We do steel frame construction. And then, of course, as I mentioned before, we have the Massive Masters, which is our program where we educate and train and then partner with our team. So we have assets in Denver, Colorado, North Carolina, and in Georgia. And then we're very Texas centric. So all of the partners of Massive Capital do live in the Texas market. As we mentioned, we do land development, building construction, and building operations. Our partner, Realty One, has about $300 million of assets under management. And then Massive Capital has about $210 million. So a total of just over $500 million in assets under management. So I've shown this slide before, but I wanted to remind folks of it again. The powers of commercial real estate investing. So we all know if you do cash savings, you have no cash flow, you have no leverage, you have no real assets, and you have no tax advantages. On bonds, you'll get a little bit of tax or cash flow, a little bit of tax advantages. On stocks, you'll get some cash flow and you'll get some leverage. But on real estate, you get all of the big boxes. So you can get some cash flow. You can use leverage to buy debt, and the leverage is the power. If everyone has not read Robert Kiyosaki's Rich Dad, Poor Dad, it's a must-read book. It talks a lot about the power of leverage. Obviously, investing in real assets has its advantages, and then there's some serious tax advantages to investing in real estate. So on commercial real estate, when we're doing especially value-add multifamily, we will have the bonus depreciation, which gets passed on to our investors because they actually own a piece of the asset. We'll see if it happens. Right now, it's at 40%. But if the big, beautiful bill passes, it will go back up to 100%. And this is a really great way for you to save on your taxes. So a little bit about tonight. We're going to talk what is a syndication, because a lot of people making sure, are you taking massive action? What would massive action look like? What are smart investors doing? Making bold moves and finishing the year strong. And then I hope to have a little discussion of Q&A. And obviously, we always talk about the power of syndications. This is the Massive Capital team. So a little bit about syndications. A syndication is a real estate group, or is a group of investors who pool money to buy or develop real estate. Syndications are ways for investors to invest in larger properties that they could not afford on their own. Syndications for passive investors are totally passive. So how it works, sponsors or general partners, they're called GPs, they're experienced real estate professionals who organize the syndication, secure the funding, and then implement the business plan. Then when we're doing this, we're raising capital from our limited partners. They're investors. They're called limited partners, and they're the ones that fund the project. And most important for you to understand is that you will own a portion of the asset. So again, a lot of our deals are structured. So for example, I have one deal I'll show you in a little bit. It has a 70-30 split. What does that actually mean? It actually means that the investors who are investing in the project, they actually own proportionately to the size of their investment 70% of the asset. And then us as sponsors of the deal, we own 30% of the project. So what happens is the investors that we're using to buy these assets actually own a larger portion in most cases. Sometimes the deals are a little bit different, but most of our opportunities are a 70-30 split. So again, the benefits are, as a limited partner, you have limited liability. It protects all of your personal assets beyond your investment. So again, if you invest in a property and everything does go horribly wrong, you are only at risk up to how much money you've put into the property. So yes, you can lose your money. I don't want to lie to you and tell you your money is always safe. Now, we believe that we're doing the most safe investments we can do. Our money is also in there with you. but you are protected. If something horrible happens, you have no other liabilities. You can target investments. It allows you to focus on specific projects. So I'm actually going to start to do a group of different webinars. So for example, I'm invested in multifamily. I'm invested in new development retail. I'm invested in new development industrial. I'm invested in a medical center. I'm invested in storage. I'm invested in different asset classes. So everything from value add multifamily to brand new A plus, A class new build properties and in different markets. So again, as a passive investor, especially when you have as many investments as I've had, you're going to be able to balance out a little bit. And we'll talk a little bit more about that. And then your returns are tied to directly to the success of the project. So again, as I mentioned, most of our opportunities are a split where we split the profit. So it's return to the exact success of the project. But I also want to mention most of our deals come with what's called a 7% preferred payment, which means until you make 7% on your money, the split does not happen. So for example, if you put $100,000 in a deal, if you hadn't accumulated your $7,000 a year, we're going to make no money as sponsors. So that's an investor first approach. Now, of course, we believe that we've organized all of our deals that we'll be able to, both of us will make money, but it's certainly important for you to understand that the proceeds are tied to the success of the project. If we don't do a successful project, we don't get paid. And the goal is that you get paid first, and then we get paid second along with you for the balance of the payments. So again, on a syndication, there are two basic types of syndications. There is a 506B, where we must have a pre-existing relationship and you must be considered a sophisticated investor. So what is a pre-existing relationship? They call it substantive. So I couldn't just have you come to my Tuesday call, never talk to you again, and then send you a 506B opportunity. I have to get to know you. I have to know what your goals are, what your risks are, what your financial status is, everything. So I need to get to know you, and then you need to be a sophisticated investor. What does that mean? Well, it doesn't mean you know everything, but it means that you know enough. And I call this protect grandma's money. So I can't just go to the little old lady who lives next door to me that I never really talked to and say, hey, sorry to hear your husband passed. I'm sure you got an insurance policy. Would you like to put $100,000 in my deal? And that's a very cold example. But the concept of it is you have to have that relationship and understand. And then they're only, sorry, and this is for non-accredited investors, but accredited can still invest at this time. So we'll talk about that. Plus, there are only 35 spots. So when we're doing a particular investment opportunity, I'm only allowed to accept 35 non-accredited investors. I have to verify that we have a pre-existing relationship. I have to verify that I consider you to be a successful or a sophisticated investor. And the goal of this is when you connect with me and myself and you say, listen, I'm interested in getting the next deal. I'm not an accredited investor. I'd like to start investing. Then I can give you first a look at them because I can't do general solicitation. So unless we know each other, I can't offer you the deal. Now, then they switch out 35 spots for 506B, correct. There's only 35 spots when an offering is 506B. So, and then let me tell you, one of the things that we do is we'll switch our deal to a 506C. Now, when our deals switch to a 506C, we cannot accept non-accredited investors. Only accredited investors can invest. Now, I do want to tell you one easy button, I call it. When an offering is a 506B, it doesn't mean accredited investors can't invest. And in fact, it's easier for them to invest because you just self-select. So I know you, I've talked to you, I understand that you're an accredited investor. I believe you're telling the truth. You just push, I am an accredited investor. And when it's a 506B, it's okay. I don't have to do third-party verification. But when we get down here to a 506C, I have to use a third-party verification. We use a group called Parallel Markets. And what happens is you'll have to upload all of your financial proof that you have assets in $1 million, excluding your home. And again, assets can be anything that you own on an asset. So I had a person who put a Rolex watch on, a whole pile of different things. Or you can do it by income of 200,000 as single or 300,000 as married couple, but you will have to verify all of the things that you are accredited to be able to invest in a 506c. The advantage for me is there's no restrictions on soliciting. So again, you've gotten into the massive capital system, but if I don't have checked 506b, you will not see the opportunity. I have to have that checked because I must make sure I have that pre-existing situation, pre-existing relationship, so I don't fall foul of securities laws. And then later, I send the email for the webinar to everybody, whether you're accredited or not. The problem is you've missed the opportunity and you can invest. We normally leave it at a 506b for about 4 weeks. So what we'll do is we'll say, hey, this is coming up. We want to give you the opportunity. And just to give you an idea, roughly it's about a 3-month time period from when we close the deal. So when we start raising capital to close the deal. Sometimes it gets extended, sometimes it doesn't. So we usually do the first month because we have to have this hard line in the sand where we've said, okay, this is your last opportunity. If your paperwork's not all signed, you cannot get in the deal if you're not accredited. What a lot of people don't understand is there is no difference between 506b or 506c investment opportunities. It's only who can invest and can I market. Years ago, before they started this 506b, these kind of opportunities were only available to accredited investors. So it's super powerful for you to understand that. Now, why do you want to do passive investing? If you don't find a way to make money while you sleep, you will work until you die. So I know myself as a child, I played Monopoly all the time. And who won the game of Monopoly? The people that own the houses and the hotels, no matter what. You could never win the game of Monopoly if you didn't own the real estate. So again, book a call with me, send me a note, tell me that you want to get on my 506b waiting list. Happy to put you on there, and I'll make sure that I check that box and that you get first notice so you don't miss out on an opportunity. So when you're talking about making real estate investments, and I just wanted to set some of the expectations, I like to consider it's like playing a game of baseball. If you go up to bat and you say, I'm going to hit a home run every time I get to bat, you're going to strike out a lot more, right? So what you want to do is you want to have a variety of investments, just like a variety of players on the team. And you're going to want to look for some singles, some doubles, and then yes, hopefully you'll get a few home runs. So I'll give you an example of this. I've invested, I told you earlier, in a medical center. The medical center is like one of the safest investments. So again, it's a triple net lease, which means the tenants, the people that are occupied in the medical center, they pay all of the expenses. They pay the taxes, they pay the insurance, they pay basically everything except for foundations. So if the parking lot needs to get fixed, if the roof leaks, whatever it is, the tenants pay for it. And then on a medical center, it comes with a double guarantee. So not only does the doctor practice guarantee the lease, he personally guarantees the lease. Plus, on medical centers, people aren't moving, right? If you set up a doctor's office or a dentist's office or some sort of thing, you've got a lot of expensive equipment, you've got a clientele base in the neighborhood, the chances of you moving are pretty low. But on that particular investment, it's only a 10% return. So when I say only, okay, most of my goal is to double my money every 5 years. This is like 1.5 my money in 5 years. But again, it's super safe. So I'm okay to have some of my money moving that way. And then sometimes you hope that you'll invest on something, the market will be great, all the conditions will be great, and you'll be able to double your money or more in the 5 years. So again, you want to make sure you're balancing risk, reward. Time is another factor. Most multifamily investments are 5 years. Some of them are 7 years, some of them are even 10, but most are 5 to 7. Sometimes you might get out early depending on the market. Most of our development deals that we'll start offering, they're normally 3-year deals. So again, it depends on the different timelines. Also, part of being a sophisticated investor, you're going to want to understand all of the nuances. So for example, on our multifamily deals, you do get this bonus depreciation. On our development deals, you don't, because there's nothing to depreciate, because you can't depreciate the land and you're building it new. So on a new development, there are none of the tax savings. So it might be a better one for you to invest with your retirement funds and then invest cash in multifamily. Again, these are all the things that it's my goal to make sure that you understand so that you can have a very balanced portfolio and understand the risk rewards, understand what works best for you. Now, does that mean you should never put cash into a development deal? No, it doesn't mean that. Does it mean you should never put retirement funds into a multifamily deal? No, it doesn't mean that. You just need to understand what you're doing, because at the end of the day, it's how much you keep versus how much you make that's important. And then again, you want to have some diversity in asset classes. So we've all heard this statement, don't wait to buy real estate, buy real estate and wait. So real estate is not a get rich quick. Real estate is commercial real estate is not a get rich quick. It's a get richer slow. Okay, it takes time for these deals to happen. So again, on most of our multifamily deals, our goal is to double your money in 5 years, but you're only going to get less than a third of that on cash flow, and you're going to make the balance when the asset sells and do different things. So, and again, you say, well, I'm only investing. So you're buying the real estate. As I said, our passive investors own 70% of the deal. So this is one of my favorite slides. I know it takes a lot of I've made a lot of assumptions. I've assumed you've always doubled your money in 5 years, and I've assumed you've had no tax issues. You will have some taxes to pay. There's no doubt about it, even though real estate is one of the most efficient. I just wanted to show this as a big example. If you invest $100,000 and it doubles in 5 years, it goes to two. 200 doubles in 5 years, goes to four. 400 doubles in 5 years, goes to eight. 1.6, 1.6 to $3.2 million. Again, very generous assumptions here to make it look exciting, to make my math look a little better, because you are going to have some taxes to pay, and you may not always double your money, but you may do better some and you may not, so it should balance out. But the most important thing that I want you to understand, we talked earlier about the power of real estate because you can use leverage. This is the power of compounding earnings. So again, I'm only talking about you making a $100,000 investment and keeping your money always moving. So this again assumes your money is moving 365 days a year, 24 hours a day, constantly earning, constantly working. You may not have the opportunity. You may get a deal that comes full cycle and you don't find another deal you like for a few months. My best real estate deal, they tripled my money in 20 months. The money came into my bank account at 10 a.m. and left at noon to go into their next investment deal because I wanted to keep my money moving. So again, super powerful. So this is only making one investment and continuing to invest. Now, a lot of people say, well, I want to start investing, but I want to live off my investments. And I understand that you've got bills to pay, you've got things to do. But I want to make sure you understand if you invest 100, you turn it to 200, and you live on 100, and you keep doing that, at the end of 25 years, you're only going to have 100 left. Again, yes, you've lived off of the rest of the money, but I want to make sure that you understand that the power of this. So again, I've got a new slide here, my new buddy, Charlie Munger. The first rule of compounding is never interrupt it unnecessarily. You want to keep your money always moving. Your money sitting in the bank, in theory, is going backwards. So as I mentioned before, I have one person dropped out last week, so I have one spot. If you're an accredited investor and you're looking for an investment, this is an apartment complex in Sealy, Texas. For those of you that don't know, it's a suburb of Houston. It's about 15 miles west of Katy, Texas. It's a real growing area. We're right off the highway. This one is a 2.3 returns. 26 ARR, 21.5 IRR. It's stable. It's 60 units. It's actually 15 fourplexes, and you can see they're really nice fourplexes. It's was it 93% occupied. There's a lot of value add opportunity. They were using one unit as a leasing office, which is ridiculous on a 60 unit property. You do not need a place for somebody to work. You just need to.
And now, here's someone you want to hear from, our sponsor.
For over 15 years, Skyline Title has been a trusted name in Texas real estate. From first-time homebuyers to seasoned investors, our team ensures a smooth, reliable closing experience every time. Backed by a decade of partnerships and proven success, we take pride in protecting your biggest investment, your home. Visit SkylineHTX.com to learn more.
To come and do tours. And this one has a 1.85 DSCR, which is a really low loan to value. This was through an agency debt, about 6.35% interest, but with 3 years interest only. And again, this is, as I mentioned, our group Massive Masters. This is one of our star students. This is Sanjay, who's part of Massive Capital, and actually who I made my first passive investment with 6.5 years ago. We've been working together ever since my whole real estate career. So I'm going to start on the topic. I know that was a long intro. Are you taking massive action? Doing the same thing won't get you different results. How many people have heard that, right? If you know, what's the definition of insanity? Doing the same thing and expecting a different result. You're halfway through the year. What do you have to show for it? This is your mid-year check-in. Going to make you do a check-in here. Let's stop wishing. A lot of people wish, right? They make these wishes and they want to do these things, and to start doing. So I'm going to do a reality check here, and you can play along with me if you want, or don't play along with me. But what I want to do is say, all right, you had a plan right at the beginning of this year. You set some goals, you'd set some things that you wanted to put in motion. So I'm going to ask people to put in the chat. Number one means, man, I'm killing it. I'm paying attention to my goals. I'm checking with them every day. I'm making great progress. Number two means I've been doing pretty good. I've been definitely paying attention to my goals, and I think I'm making progress, but I'm still not a one. I'm not there. And a three, man, I made these goals, and I hardly look at them. I haven't been doing anything. So my self-confession, I'm a two. Okay. So if you feel comfortable, a one, you're killing your goals. A two, you're doing okay, but you wish you could do better. And then a three, man, I'm just not getting anything done. I'm getting no traction. I can't pay attention to my goals. Okay, well, I appreciate it. We got a bunch of people in there in the middle like me. And that's okay. The most important thing for you to do is some sort of reality check, right? Some sort of check-in that says, I'm doing okay. And I'm really fortunate that I work with a group of people that we're always kind of checking in with each other, kind of an accountability partners. And I just really wanted to make sure that we're taking this stuff seriously and we're really thinking about it, right? So again, where are you with your goals you set back in January? We've talked to that. Are you closer, stuck, or even further away? Did you know that 80% of people abandon their New Year's goals by February? That's pretty staggering, right? 80% of people abandon their goals by February. Most people overestimate what they can do in a day and underestimate what they can do in 6 months. They I don't know if anybody's ever heard of just to make a little bit of incremental improvements, right? There's an amazing book by a guy named Darren Hardy called The Compound Effect. I suggest everybody who hasn't read that book to read it. It's called The Compound Effect. And it's really easy when you're looking at your goals too closely to think I'm going nowhere. But you need to look at the compound of, okay, I was here, I've done all these things. And when you actually take the time reading that book, I got to be honest, it was 2 years ago. Man, I was struggling. I was really struggling. I felt like I was a hamster on a hamster wheel. I was just running, I was working day and night and not making any significant progress. And then, and I actually read that book, and it's on one of my lists where I try to read. I have certain books that I try to read every year. I'm a big Audible guy because I travel a fair bit through Texas, going to different events, go to the gym every day, and I listen to my books. Super, super great way to be reminded. So why aren't we moving forward, right? There's lots of reasons why you maybe not move forward. And again, these were some of the ones that I put on here. But again, I would like you to give me some sort of idea. So no clarity. Okay, you made these goals, but they're not smart goals, right? They're not specific, they're not documentable. You can't do the things, you can't really measure them. You just don't have anything, so you don't have the clarity. A lot of people just fear failing, so they don't even start, right? How many people do that, right? They think, well, I really got to do. Let me give you an example. I've got 3 years of paperwork on my dining room table, and every weekend I'm going to sort them. 3 years is a long time to have paper that you haven't sorted, right? Because it's just, I'm overwhelmed. I don't know where to start. You get in a comfort zone trap. I think, okay, I'm doing good. I'm busy. I get things done. I'm making some sort of progress. So things are happening. And then this is another hard one. No execution. You're stuck in the planning mode, right? Analysis paralysis. Well, once I figure it out, I'll get going, right? Once I get this thing figured out, okay, then I'm going to start doing it. Nobody successful figures it out, starts doing it, right? You've got to start doing it. You can't take a driver's license in a parked car. You've got to eventually get out there. You've got to have some people helping you so that you learn the rules of the road. And you often, when I was a young man, I went to a driving school, and there was a driving instructor in the car, and they help you do it, right? So a goal without a plan is just a wish. And so you got to make sure that you have a plan. So what is massive action really? So massive action means making uncomfortable moves, that call, that risk, that new deal. One of the things that really hard for me, I do a lot of reaching out to people. I love talking to people. I love it when you book a call with me. I love it when I go to an event and see people, but I am the worst procrastinator for making that call. I am just, it's just something that I don't know why, but it just, and when I get over it and I do all the calls, it's amazing. I feel so much better. Like I feel like, okay, I got this done. And this happens a lot, right? I'll get my list of people and I'll say, okay, they're interested in this. And then I just don't take the time, right? I just don't make the uncomfortable moves. And that's something that's uncomfortable for me. And I call it cold calls, and it's not really cold calls because I have somebody, somebody may show up at a Tuesday thing and I never really talk to you, but I'm uncomfortable with that. Constant execution. Okay, daily decisions, not the big one at a time events. So again, part of getting ready for this call, I was reread or re-listened to the audiobook of Stephen Covey, The Seven Habits of Highly Effective People. I don't know if anyone on this call, I read that book as a young man and it changed my life. And it talks about putting things in quadrants, right? There's, important and urgent and all the different things. We spend so much of our time doing the urgent, non-important. We spend so much of our day doing that. If you sit back and you look at your week, you got to make sure failing forward, learning to go, not waiting for perfection, right? Again, you will never ever have everything figured out. You just have to start. And then again, this is a huge one. I really try hard to do this. I refer to myself on my LinkedIn profile as an obsessed learner, but in yourself, your skills, your network, and your assets. A lot of people don't think about investing in themselves, and again, when you talk about reading and learning, they say that most executives, most high paying CEOs read 48 books a year. My goal was to double that. So I actually did. I did 100. And then I'm probably now average about 60, 65 books a year. And that includes listening to some a couple of times. But the average general person reads four. The average person reads 4 books a year. And again, I vary my books. I love my Audible because I'm driving it, right? But you can't keep dipping your toes into the water and expecting to make waves. So again, what are smart investors doing right now? They're doubling down. They're not giving up, right? It's really a challenging market right now. If you were here at my last week's lesson, there's billions of dollars of money that's close to default in the multifamily space. But again, excuse me, sorry, you cannot wait for the right time. You need to create it. You need to work harder to find the deals. And again, all of you know I'm a big Warren Buffett fan. Be fearful when others are greedy, and greedy when others are fearful. The world right now is fearful, right? We are terrified. Every day we turn on the news and we think, oh, what's this going to do? I mentioned it on my call last week. I've got some folks saying, well, what are tariffs going to do to your value add multifamily? Well, really nothing, because we're not buying anything. Maybe a fridge and a stove, the price will go up, but it's not like we're importing lots of parts or doing things. Now, new construction or new build things are different things. Yeah, there's definitely things you need to do. But many real estate investors ramp up in Q3 to prepare for their year-end gains or goals and gains. So again, you want to look at your things and could I make a passive investment and get that bonus depreciation before the end of the year? Making sure that you're doing your planning out right, right? And then market downturns. We're definitely in a market downturn right now. And again, I mentioned it before, one of the other assets, we actually just closed that raise on our Horizon Apartments in San Antonio. We bought it almost a year and a half ago. But when it first was on the market, it was at $21 million. And, we looked at it and that economy, we just couldn't afford to buy it at $21 million. Long story short, somebody else put an offer in, couldn't close. We came back, made another offer. We ended up buying it for $16.9 million. That's a significant discount. If we'd have bought it at $21 million, we'd be upside down right now. But buying it 16.9, we're not. And if you remember before, when you're investing in multifamily, commercial real estate, it's very different if you're in the single family space, right? If you could increase the rent on your single family rental by $100, does that increase the property's value? It does not. It may increase the cash flow, but it doesn't increase the property's value. So on our apartment complex in Horizon, we're getting an average of 8% rent bumps, which is $100 a month. When we can do that across the board for all 200 units, that produces $4 million in new value to that apartment because it increases our net operating income divided by a cap rate. That's calculated at a 6% cap rate. Right now it's about 6.5. So we're not quite there yet. We think the cap rates will come down a bit. But anyways, just by doing that one lever on buying the multifamily, we're producing $4 million of value. And again, remember, our investors get 70% of that value that was created. So now is the time to pivot, not to pause. So again, your mid-year reset exercise, and again, I trying to be creative, and I'm challenging you to do something here. Take 15 minutes and grab a journal or a note app and ask yourself, what were my top 3 goals in January? Which ones have I made progress on? Where am I falling and why? What are 3 bold actions I can take this week to get back on track? And interestingly enough, writing down your goals, this is somebody smarter than me figured this out, makes you 42 times likely to achieve them. So again, I know we only have a few folks in the call and you have to hold yourselves accountable. But if you want to put a yes or a no, do you plan to do my plan? I'm trying to make this more interactive. So it's not, I got to get a better, but again, if you're interested, if you want to do this, and again, you can come back next week and say, Trevor, I did it, I didn't do it, or you can just ignore me. But I want you to at least challenge yourself to do some sort of introspection, to look at yourself and to say, what can I do so that I can have a more fulfilling year next year or the next 6 months of this year? So again, You still have time. Don't give up. Don't get discouraged. You still have 6 months left. So look at it this way. That's 180 days. That's 4,320 hours. 2,000 or 259,200 minutes. When you look at it that way, you got a lot of time left this year, right? When you think about it, you got 180 days, 4,300 hours, depends how much you sleep, how many minutes you have. And so if you can just be a little more productive, if you can just take this into account and look at it, you can completely transform your life in that time, or you can let it all slip by again. And again, I've mentioned this before. I was always interested in real estate, but I just didn't know where to start. I didn't do it. Waited till I was 58 years old to start it. Now I'm on this mission to make sure nobody waits this long to be able to start it, right? So then this next 6 months will not be different unless you are. Again, I want to say that again. Next 6 months won't be different unless you are. So let's take some bold moves and do it this week. So again, 5 things you can do: start an investment if you've been researching, launch your side hustle or project if you've been looking to do, schedule a networking call or event, hire a mentor, coach, or join a community. And again, I'm not necessarily your mentor or coach, but I'm happy to say, hey, listen, let's just talk at once a month and check in over and above this call. I am absolutely happy to do that, because why? When you're helping somebody else, who does it help more? It really helps you more, right? You got to do these things. You got to get ready to do it, and then block some time off to work on your goals. Just don't put it in your routine. And I think this is one of the biggest ones I suffer. So I'm a super organized guy. I put a lot of things into routine. I've got wicked ADD, so you say squirrel and I look away and run. My report card all through elementary school was, Trevor's a good boy. He would do really good in school if he could only pay attention. So again, take time just to work on your goals. Don't wait. Don't overthink. Again, so many people overthink. Just move. Get accountable. So some actions: DM me action if you want to do it. Let's check in weekly to share progress, stay focused, build a circle that pushes you to move forward, not holds you back. Proximity is power. Find your people. Find people that you want to hang out with and do. And again, let's finish the year strong. So again, share some moment with somebody that needs a reset. Comment below what's next, both move. Let's finish the year strong. Don't wait till tomorrow to become the person you could become today. So that's kind of the end of my thing. I didn't get a smooth transition into my next thing. Just if you're a lady on the call and you have not attended my partner Jasmine, she calls. I'm going to put the link in the chat here. It's amazing. They've got an amazing ladies group. They do a lot of things for powering up people. And again, if you're not sure ever where to do, what to do, how to talk, you want to just connect and talk with somebody. I love connecting with people. I love helping people. My goal is to help everybody around me. And you can book a call with me and you say, I'm not ready to invest. It's absolutely fine. My goal is to help empower people to understand what they can do in their life. So that's the end of my thing. Is everybody still awake? Well, we got Terry. Good to see you, Terry. I can't see who's here when I'm presenting. So and Natasha and Audrey and John, they get the always in my corner mode. Those guys, so they show up for everything I do. Hey Keith, good to see you. Fellow Austinite. And Terry, she's way up from Dallas, to see her all the time when I go up there. Anybody have any thoughts, any questions, anything that you think I missed? Feel free, hop in. Don't be shy. That's a good journal. I don't do a good job on my journal, and it's something I wish I could do better, but I appreciate that. Any other thoughts? So one of the things I'm going to ask, awesome, got a call scheduled with me tomorrow. That's being active. I saw that actually pop up. So I was going to say something, then my brain just went poof. Have anybody have your brain just go poof?
All the time.
It's good to see you, Fatima. I heard you joined up with Massive Masters. I heard that.
Yes, Trevor. My daughter pushed me to
Your
join
daughter
the
pushed you.
Massive Masters.
That's awesome. I'm super proud of you.
Yes, yes. She had to jump on commercial side. So start passively invest,
Yeah,
then slowly go to the next commercial storage, purchase something.
yeah, yeah. And you know, and it's when you can do it as a mother and daughter, somehow that it just seems so special to me. Like when you start looking at groups that do things together in family units, you know,
Yeah.
I think it's great. And I
We
know,
enjoyed a 3-day Massive Masters. We learned a lot of things quickly.
yeah,
Then we joined the group.
yeah, I'm awesome. Yeah, your daughter speaks up, reaches out to me lots of times.
Yes, yes, she is asking so many questions you because I'm asking her, she will ask you.
That's good. As I said, I love helping people.
Yes, yes.
And I know sometimes, and yeah, when we've gone to events in Dallas, you've been quiet, so I drag her around and introduce her to everybody.
Okay.
But it's good.
For
Thank you.
Trevor,
Yes,
Trevor,
sir.
I've got a quick question.
Yeah.
With regard to returns, you stated the normative returns, generally speaking. If you look at sort of on aggregate all the projects, do you find that returns tend to be more than the normative on average, with some being less, or is it sort of scattered equally each side so that it averages out to that normative return? What do you kind of see when you look at everything on aggregate?
Yes. So other than the last year, because I've had 3 deals that have actually lost all of my capital. So that really threw my numbers off. You know, I was pretty close. And again, I had a big winner, right? Tripled my money in 20 months. I gave them $52,000. 20 months later, they gave me $152,000 back. I would like a few more of those, please, and thank you. And again, that was the perfect deal, the perfect time, the perfect storm. So it was bought by a very experienced operator when the market was in crisis. It was a really rundown property. They instituted their business plan flawlessly and quickly. And then somebody had some money. They needed the 1031, so they wanted a quick close and they wanted that property and they paid a premium for it. And they actually retraded the deal as interest rates started to go up because that messed up their numbers a little bit. And thank goodness these guys were smart enough, because if the hey, you had waited, the deal just wouldn't have worked again at those interest rates on a new loan, because I had to get a new loan on that property. You know, so again, it's a little bit, but on average, I'm still in the game, still doing good. It's just been a little bit challenging when, you know, out of 33 deals, I've had 3 that have lost my money. And luckily I didn't have a lot in each of those, so on average it's not killing me. Each of those deals I was able to get in for half of the minimum at 25. Still losing $75,000 is no fun, but at least I didn't get in there. And that's why I'm always talking to people about diversifying, right? Get in a couple of deals, kind of spread your risks. And then some deals offer different structures. So for example, some deals will have just a pref with no upside, and then talk to the sponsor and see if you can split it. It's kind of like doubling down in blackjack. You know, you got a little bit, this one I'm gonna make less on, but I'm top of the stack. So again, you got to look at where you are in the capital stack, right? So the bank gets paid first, and then sometimes the pref equity guys get paid third. The limited partners get paid, sorry, second. Limited partners get paid third, and then general partners get paid fourth. If you can get up a little higher in that capital stack, you can sometimes do better. but all real estate deals have risk. But I also believe we're in one of the best buying opportunities. So again, I did a couple of deals at the tail end of a pretty hot period, and then there's a readjustment. I think all of my new investments are going to do very well just because of the timing. And again, be careful where you invest, right? I'm mostly invested in Texas. I do have a deal in Arizona, as I mentioned, North Carolina. I had one in South Carolina, Georgia, and Denver's an interesting market that it's not necessarily, it has a very low operating. So for example, most of our multifamily deals in Texas are about a 50% operating. Our deal in Denver is a 30%. So you get to keep more dollars because the operating costs are a lot less. Awesome. Any other questions? Well, again, I always appreciate if you learned something today. If you enjoyed it, please invite a friend to come back in 2 weeks. And you guys have a great July 4th weekend. Enjoy it. Again, we live in one of the greatest countries in the world. Especially very favorable for real estate investors. And so I appreciate everybody always showing up and your participation tonight. Again, feel free to reach out to me. Love connecting with everybody. Thank you and have a good night.
Thank you, Trevor. I think I came in late. I thought
I
it was
know
starting
you
at
got here
8.
at the end.
Yeah.
I was thinking of you today because I booked a trip up to Canada in October. So we'll make sure we
Wow.
connect.
Yes, please come
Yeah.
over, visit us.
Yeah, because I'm a Canadian to begin with, and this is one of my fellow Canadians here.
Yeah. Thank you. Thank you.
Gonna go up. My daughter's turning 40, speaking about time flying.
Oh, yeah. Yeah.
Awesome. Well,
It's
good to
good.
see everybody.
All right.
Thank you. Take care. Good night.
Thanks, Trevor. Bye. Good night.